but I can tell you that if we kept on this track, what I could guarantee is that we would have had a financial crisis. I've studied it, I've taught it, and if we had kept up these spending levels, that everything was unsustainable. Here's the part that I just found intriguing because in the midst of a Fort Knox gold audit taking place under his watch, he also made that comment about monetizing the assets on the U.S. balance sheet for the good of the people, which he later said, well, he was not referring to gold, but here, we are resetting and we are putting things on a sustainable path. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on the road again today, although live from the beach in Fort Lauderdale. So hopefully you're enjoying the background, maybe a little bit more than today's precious metals pricing, as we see gold hanging in there, still above 3,040. And if we go down here, we can see we did break 3,050 up to a high in the futures of $3,052.31. And that was within the last day. And coming back in a little bit today, which I think I mentioned this in one of the columns or shows recently, but certainly not entirely unexpected. You would think at some point you would have a little bit of a correction, seeing some of that today. And again, just keep in mind, here was that last correction a couple of weeks ago where there was a little panic out there. And then shortly after that, where were we here? 29.01. So 140, $150 higher. And again, I would, by all means, I would not say like, oh, we're never seeing below 3,000 again. So be prepared for that. Obviously, when you have a year like that, hopefully that makes it a little bit easier. And anyway, and we'll dig into why some of the things that you've been thinking about these past couple of years. If you've ever doubted yourself, well, I'm going to help put that to rest. Quick look at the silver price, where silver down a bit more on the day. And as you can see here, stocks up, but silver down 53 cents. So if we look at the range on silver, we see that, well, that 35.07, that was last year's high. See what we have here. Got fraction of a penny below 35 a little bit before that. So anyway, that is a quick look at the pricing. But what I really wanted to dig into here was something I mentioned briefly on yesterday's show and thought it deserved its own commentary, because fascinating comments from Mr. Bessent, new Treasury Secretary Scott Bessent, saying White House is trying to stave off a financial crisis. No guarantees that a recession will not occur. And I don't know, I suppose I haven't really had a lot of people give me a hard time about saying, oh, well, you're promising that it's all going to collapse one day. And so maybe I defend myself against my own inner thoughts more than actual people who are saying that. Yet there you go. You don't have to take my word for it anymore. Here's the Treasury Secretary saying we're trying to stave off the financial crisis, implying that there's something on the way. And oh boy, let's just get into this one. I'm going to read a couple parts of this here. Policies initiated by the Trump administration designed to head off a financial crisis that may be the result of major government spending over the past several years, but caution, there are no guarantees that no recession will occur. So he's saying that there is a chance of recession. Jerome Powell does not seem to see that, even as he cut interest rate 50 basis points while inflation was rising. But Scott Bessent having a different view. Here's the interesting part. While there's been concerns of tariffs and all that other stuff, when asked by an NBC News reporter about a recession occurring, Bessent said that the Trump administration is working to prevent a more serious crisis and that there is no reason for a recession to occur, although there's no guarantees that it won't recur. Here it is. There's no reason it has to, but I can tell you that if we kept on this track, what I could guarantee is that we would have had a financial crisis. I've studied it, I've taught it, and if we had kept up these spending levels, that everything was unsustainable. Again, that's his words, not mine. You can look up his credentials. Okay, he's a government official, but here's the part that I just found intriguing, because in the midst of a Fort Knox gold audit taking place under his watch, he also made that comment about monetizing the assets on the U.S. balance sheet for the good of the people, which he later said, well, he was not referring to gold. But here, we are resetting and we are putting things on a sustainable path. I've never met Scott. Maybe he likes using the word reset a lot. I just find that one interesting in the context of everything else that's going on, which I might add includes a lot of gold and silver coming from London to the US, even when there was never even any speculation that there would be tariffs on goods coming from England. Now I get it. You know, if you were getting silver from Mexico or Canada and that's going to get tariffed, then although I just, for whatever it's worth, I'm still not sure that to me is a full explanation, but you do have the metal coming here. I have wondered and also heard speculation, could the US government be behind some of that metal? I don't know. I think it's also premature to say that that's the case, premature to conclusively rule out that's the case, at least from what I have access to. So anyway, here he says resetting. And obviously they talk about Doge, which I still think on one hand, yes, to stop wasting money on fraud is great. Although that's the problem with a heavily indebted economy with 23 or 24% of GDP coming from government spending. Not an easy situation. Here we see more tariffs. In the past several weeks, the indexes, Dow Jones, NASDAQ, have seen decreases. And Bessent described that as a healthy correction. Also mentions, I've been in the investment business for 35 years. I can tell you corrections are healthy. I would agree with that. It's not healthy is straight up euphoric markets. That's how you get a financial crisis. It would have been healthier if someone had put the brakes on in 2006 and 2007. He says we wouldn't have had the problems in 2008, so I'm not worried about the markets. Might add that as I read, well, we'll read this again, but keep in mind that the Fed is, at least according to the futures market pricing, getting ready to cut interest rates again. So we wouldn't have had the problems in 08 if we hadn't had all that easy money. So, but we have had a decade of 0% interest rates since then. And in terms of what's not healthy is straight up euphoric markets. Let's take a look at those. Here is the Dow Jones. And it's interesting looking what happened from 2020 to now. So in just 5 years, you had COVID, Dow Jones has doubled. That has doubled. I don't know. Maybe there's someone out there that can make a case that our productivity has doubled. I'm not able to see how that's the case. Here's the S&P doubling over the last 5 years. Then, oh goodness, look at the NASDAQ. Let's see. Okay, there you go. There you get your double there too. Now, in all fairness, I mean, you could say the same thing about the gold chart. Although, at least in my view, if you subscribe to the view that, my view, if you subscribe to the view, my opinion, if you subscribe to the view that gold should be correlated with debt, and well, I guess right now you wouldn't, this would not be correlated with the Fed balance sheet, which has come down, although gold and silver prices were also getting clobbered while the Fed was increasing its balance sheet in the 2000 teens. So anyway, I'll just point out similar pattern there. And let's see, was there anything else? Responding to a question about whether a recession may occur, there are no guarantees, and talks about COVID. Who could have predicted COVID, right? Which on one hand is a reasonable question, although fortunately I do know the answer. And man, can I select multiple ones? Alex Jones seems to find out these things before anyone else. And also, here's Johns Hopkins. I'm sure many of you have seen this, but this was their Event 201, where back in October of 2019, they did a 3.5-hour pandemic tabletop exercise, simulated a series of dramatic scenario-based discussions. Basically, they simulated COVID a couple months before it came out. And then, of course, they say, this is based on a fictional scenario, everything fictional. And anyway, you can read more about that if you Google in Event 21 or Event 201 rather. And they talk about, they even made videos of, well, if we get a pandemic, how would we respond? And they talk about printing money and fear mongering people and all that. So Anyway, I guess that's maybe we can get White House a on the Johns Hopkins news list. Although even better than that, maybe we can get the White House onto the Arcadia Economics Gold and Silver Daily Substack, where we are covering this on a daily basis, all the theatrics that are going on, and can make these easy to read and follow so you can get a good idea of what's happening day to day. There's some video mixed in there. Here, we're talking about some of the issues of the silver supply, which are continuing to grow. And a bit later, I'll have a video about a new Bloomberg article that doesn't sound good. Even the fact, especially that Bloomberg is writing about it. Of course, we had Eric Sprott and Robert Gottlieb, former J.P. Morgan Precious Metals Director, warn on silver. And again, in the midst of the Fort Knox audit and a whole lot more. So, anyway, you can go to goldandsilverdaily.substack.com. Piece comes out every week. You can get a free trial subscription, or it's only $10 a month if you'd like to get the full service, which fortunately I think a lot of people have been enjoying. So, with that said, going to wrap up for now. We will have a comment later today about that Bloomberg story. You're going to want to hear that one. So, hit the subscribe button and the notification bell so you can be notified when it comes out. And I will see you again soon.